Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P500 followed by the Nasdaq100 and the DowJones30 future chart. Starting off here with the S&P500 on this second trading session of the week. We currently find ourselves trading at 4,468.5. So well off the session highs, which were up at around 4,484 as we carried over from yesterday's impressive session where we ended the day up around 0.6%. Now, if you watched my videos last Friday, you would have heard me saying that I was anticipating for a rally either on Friday or Monday, and we kind of got a double a dual day rally here where we ended up around 0.15% on Friday, and then of course as I just mentioned yesterday we was up around 0.58%. So we managed to recover about a 1% of the losses that that occurred pretty much since the start of September. But I still believe that we are destined to trade lower here. This was what I was explaining during yesterday's trading video that I posted here on YouTube, and that's due to the fact I believe that we are trading within this ABC correction phase. And anyone who's studied the Elliott waves structures or the ABC correction patterns, you'll know that the B to C leg has to break below the A leg low. So in this case, the A leg low was all the way back on the 18th of August, and that sits around 4,340. So that's what I'm kind of calling for here, is a move back below the August swing lows here. I think that we could potentially go and test a 200-day EMA, and I know that's probably not a popular opinion to many watching this video, but I'm just trying to come here on YouTube and use it as a platform to kind of, just share my own analysis and opinion on the market. And whether you agree with it, that's up to you. Of course, I do not have a crystal ball and I do get it wrong sometimes, but most of the time I do get it correct. And, I'm just trying to warn you here, if someone's thinking of perhaps buying big here just because we're trading above the 50-day EMA, I would definitely warn you not to do so, because I really do think that this favors for a more severe pullback over the coming days and weeks. And of course, the last week and a half we've kind of been in a bit of a blackout zone with regards to economic data. We haven't really had much apart from the ISM manufacturing, which was last Friday, but of course tomorrow that changes because we get the CPI reading, and that's going to be very important to see how inflation is holding up, especially with rising oil prices. Now, of course, tomorrow we're going to get two sets of inflation data. We're going to have the CPI, and then we're going to have the core CPI, and it's going to be the headline CPI, which is going to probably shock a lot of investors in a bearish way, because that involves and includes crude oil. And of course, as I showed you during yesterday's trading video, look at crude oil. Crude oil is currently trading at a new yearly high, sitting at around $89 a barrel. And so with that being the case, that's definitely going to have a negative effect on the core headline, the CPI headline, not the core CPI, because the core CPI excludes food and energy prices. So oil won't be included in the core CPI. But I should mention that it is the core CPI which the Fed pays most of their attention to. So that, of course, will be quite good to know heading into tomorrow's number. And then in terms of other news events, we have Apple today, which are announcing their iPhone 15. I actually posted some research over on my Signal team, and it just shows that it's kind of a non-event. Apple, with regards to their new iPhones, it's pretty much an annual thing. It has been anyway for the past 13 years, where every September they come out with their brand new iPhone. And for the past 4 years running, Apple stock has traded down in negative territory 1 week after the announcement. So that's something to kind of have in mind if you're thinking about buying Apple or buying the S&P500 and the Nasdaq100, which of course has Apple as their largest stock in those indexes. Is that to have in mind that the last 4 years running, Apple actually has traded negatively 1 week post announcement. So I think that the markets are going to continue to struggle as we do work our way through, historically speaking, the worst performing month of the year, which is September. But I am hopeful that in October we will see a rip your face off rally here. Very similar here for the Nasdaq100. Currently find itself trading down at 15,344. I wouldn't be surprised if we go and test a 50-day EMA like we did do late last week, down at around 15,174. And very similar to the S&P 500, I'm looking for a break below this 50-day EMA, where we do go and break below the August 18th lows, which sit at around 14,565. So I think the 0.618 fib area, which sits at 14,350, could be an area of initial support. And then finally, moving over to the DowJones30, as I've mentioned in previous videos, I like the setup. Technically speaking, I think it's the best poised and positioned index for future rallies here. You know, we continue to create a series of higher highs, higher lows. We're in an uptrend, and I think it's only a matter of time now until we do go and retest those swing highs up around 35,660. But the only thing is that we just kind of need to get past this month of September, which, as I just mentioned, is historically speaking the worst performing month of the year. So I think once we've got September over and done with, I think that's when we will then see bulls step back into the market, and the $7 trillion which is currently sat on the sidelines will get put to good use. That's it for today's video, guys. Make sure you scan this QR code if you'd like to join my Signal team. It's completely free of charge to join. You will also gain access to my daily market research. I post that every single morning prior to the US markets opening, so it will help you guys at home navigate through the very volatile markets. But all you got to do is scan that QR code on your screen. It will take you to my website. It takes 10 seconds to sign up, and if you find that you don't like my service, then you can cancel at any time, completely free of charge of cost. Thank you, and have a good day.